Question. A, B and C are partners in a firm sharing profits in the ratio of 2:1:1. Their balance sheet as at 31st March 2020 was as follows. Balance sheet, liabilities, creditors 50,000, capitals A 80,000, B 80,000, C 60,000. Total 2,20,000. Assets, goodwill 30,000, land and building 80,000, plant and machinery 56,000, car 54,000, debtors 48,000, cash 2,000. Balance sheet total 2,70,000. The firm was dissolved and the assets realized. Goodwill rupees 20,000, land and building rupees 1 lakh, plant and machinery 50,000, car 28,000 and debtors 50% of the book value. Realization expenses were rupees 2,000. Prepare realization account, capital accounts of partners and cash account to close the books of the firm. Liabilities, creditors and capitals. Creditors 50,000, capitals 80,000, 80,000 and 60,000. First, creditors. It is an external liability. So transfer creditors to the credit side of realization account. Realization account, credit side, first item 50,000. That is the creditors transferred from balance sheet. Then capital accounts A, B, C. Transfer capital balances to the credit side of capital account. Capital account, credit side balance brought down 80,000, 80,000, 60,000. Next, assets. Assets are goodwill, land and building, plant and machinery, car, debtors and cash. Transfer goodwill, land and building, plant and machinery, car and debtors to the debit side of realization account. Realization account debit side to sundry assets transfer goodwill 30,000, land and building 80,000, plant and machinery 56,000, car 54,000, debtors 48,000, total 2,68,000. Then cash, brought down cash to the debit side of cash account, balance brought down 2,000. Next, adjustments. Goodwill realized 20,000, land and building 1 lakh, plant and machinery 50,000, car 28,000 and debtors 50% of the book value. Book value of debtors 48,000. So the amount realized from debtors is only 24,000. That is 50% of 48,000. Write the amount realized on the credit side of realization account, cash account. Amount realized from debtors 20,000, land and building 1 lakh, plant and machinery 50,000, car 28,000, debtors 24,000. Total amount realized 2,22,000. Then realization expenses were 2,000. It is a payment. So write it on the debit side of realization account, cash 2,000. In this case, liabilities payable or external liability is only rupees 50,000. Payment is not mentioned in the adjustments. So paid book value to the creditors. To cash 50,000. Realization account, debit side 50,000. If the question is silent about settlement of any liability, then it is assumed that the book value of liability is paid. Therefore, creditors are paid at book value of rupees 50,000. Next, balancing. Balancing debit side total 3,20,000. Credit side total 2,52,000. 3,20,000 debit side total 3,20,000. Credit side total 2,72,000. Credit side total 2,72,000. Balancing figure 48,000 on credit side means loss. Loss on realization 48,000. A's share 24,000. B's 12,000. C's share 12,000. Next, transfer cash account on debit side to the credit side of cash account. First, 50,000, that is the amount paid to creditors, and next 2,000, that is the payment of realization expense. Transfer cash to the credit side of cash account. Then debit side, cash 20,000, 1 lakh, 50,000, 28,000, 24,000. Credit side 20,000, 1 lakh, 50,000, 28,000, 24,000. Transfer these amounts to the debit side of cash account. 2,22,000 is the total cash received. Transfer it to the debit side of cash account. Then transfer of loss. Transfer loss to the debit side of capital account. To capital account debit side realization 24,000, 12,000, 12,000. Next, balancing of capital accounts. Capital balances A 56,000, B 68,000, C 48,000. Balancing figure cash account, transfer that amount to the credit side of cash account. A's capital 56,000, B's capital 68,000, C's capital 48,000. Cash account total 2,24,000.